One here.
We're up.
I feel a little engine rumble.
Oh, bringing it back on the funky beats.
Yeah, I like the little funky.
What is that? It's like a little 90s, a little mix of fresh.
It's a little 90s, 70s mixed
There you
together.
go.
It's almost like restoring something old and making it new, which ties together with our subject of today, everyone. We're talking about renovation loans. And if you're just tuning in, you are listening to MLO. We got the full crew together. CK, say hello.
Good afternoon, everybody. Thanks for joining us.
And bringing it around to the mother of mortgages, Brie Fisher, say hello.
Hi, everybody. Happy Wednesday.
And of course, Casey, say what up.
What's up, everybody? Your boy's in the house.
Yeah, we're bringing it in hot here. Want to thanks to Joshua Phillips for this nice little intro song.
Little
Guys,
JB hooking us up.
This is a big one. Renovation loans, big topic. We are constantly trying to have episode titles that pertain to the most common questions, right, everyone?
Right.
So this is a hot topic. Everybody always asks, like, what do I got to do? I want to remodel. They want to gut. They want to, right, CK?
Yeah, everybody has their own idea for their own home, and this is another option to take advantage of. And we're going to talk about it and dig in deep as we do.
Digging in deep. Digging in.
I want the farmhouse.
You want a farmhouse?
No, that's what I hear all the time. I want the farmhouse.
Oh, you hear that? I'm hearing shipping container.
Ooh.
You and I were texting about that the other day. Have you seen those, Brie?
Yeah, you connect them together and build a whole house off of shipping containers.
That's the T design.
Yeah.
Yes.
Yeah.
Google it, though. Some of the stuff's intense.
It's always a new fad because it was the tiny homes for a while. And I actually had a client that lived in one, and they'll never do it again. It was so hard. Just tiny.
Sure.
The tiny house.
Yeah,
That was really hard to
They
do.
lived in a tiny home, and they wanted out.
Was that pre-COVID?
The walls are closing in, man. I got to get out of here.
This was like 2007.
Well, those shipping containers are fire retardant, so I think that's one of
The wave of the future.
wave of the future.
Yeah.
Let the fire just go over me.
Yeah.
Get a little hot in there, but
Well, I heard that they make those to float now, too.
Yeah, you can put them in the middle of the Indian Ocean, I guess. Sounds like it, you know.
But
Live off an island near
the
Thailand,
glass
you know.
bottom.
Well,
exactly.
We do have to throw out, we do
Yes.
not have a loan program for shipping containers. So,
Not yet.
Glass bottoms in the Indian Ocean. Sorry, it's out.
and we do encourage that VIP line, but please don't hit us up about shipping containers because
Right.
we don't have a loan program for that. But going back to it, renovation loans, and Brie, you're going to be our lead on this one. We're going to lean on the mother of mortgages to give her insight on quite a few different things. So let's roll into the first segment. What is the renovation loan? How can it create some value? And just hit us hard. Tell us what's going on.
Absolutely. Let's do it. So there's, a few factors that go into it. We get questions about, hey, I've seen a house on the market that I want to buy maybe, but it needs a lot of updating. It's quite outdated.
Like my 72 ranch.
Right. Right.
Or the wood panel station wagon.
Got the shag carpets up the walls, you know.
So, they ask us, what can I do to upgrade it during the purchase? And, sometimes if houses are on the market for a while because they need such, more extensive work than maybe just a cosmetic fix, then how do we solve that problem and still buy this house? And if the houses are, outside of an affordable range, how do we buy a house that maybe needs a lot more updating and still be able to afford that? So we're going to talk about that today. And then also the refinance part of it. If you have a lot of equity or if you have actually little equity in the house, but you don't want to buy, you love your house, it just needs some work, right? Whether it's a roof or,
Totally.
I hate the kitchen, or we need to divide up 2 rooms because it's going to be COVID and we need more space,
Maybe
right?
you need a little, daycare or now a school spot for the kids, right?
Totally.
All the in-home schooling for sure.
Yeah.
And work
So
offices.
how do we do that?
Work offices.
Right. So there's a couple different loans, just to get into some statistics here. Between 2018 and 2019, there was an increase in renovation loans by 44%.
Wow.
That's pretty huge.
44%. That's a
Right.
lot.
And it's, the renovation and the home repair, home improvement industry is over $340 billion industry. So there's definitely a huge,
billion.
right.
With a B, guys.
Yeah, I think those numbers are going together, with the increase, and we're seeing a lot of people upgrading their homes or wanting to. So, yeah, this product is great for just combining those two, items just to get them into play. So,
Right.
what are those products? Who are the agencies, and how can a client achieve using them?
Absolutely. So there's several different renovation loans. There's 4 actually. There's 2 under FHA and 1 under conventional and 1 for VA. So you can have as little as 3% down up to, well, actually with the VA, you have 0% down and can do the renovation loan. So 0 to 3.5% down and still get all of the repairs and upgrades that you want to do.
That's super cool, especially I think for a lot of our clients out there, that wonder like, oh my gosh, like how much costs are involved? Do I need to burden a lot of that? I mean, think about that from a 0 to 3.5% down, guys. Like that's very manageable.
Yeah, I think it's, you're finding that right neighborhood. It's almost the right house, and there might be just as a couple of little twerks and tweaks that you want to do to it. And this could be a great product to make sure that, hey, I do need this kind of kitchen for me to make this next move, but this is the school district I want to be in. These are some of the best products out there and able to achieve those goals when maybe you're just not seeing anything else in that neighborhood.
Right.
And I really liked what Brie was discussing with us earlier about just in this market being so competitive. Often the only inventory still on the market more than like 30 days, at least in the Pacific Northwest, are things that need a little facelift.
Right.
So depending on what sales price you're in, right, Brie, like
Right.
it might be the only option unless you want to significantly overpay for something polished up. So could you give us a little more insight on that with what's out there? Because you gave a
Yeah.
great example to me earlier.
Yeah. So, I want to talk about maybe giving a payment example and a pricing example. And of course, depends on credit and employment and what loan you're getting and a whole bunch of factors.
All of our little compliance things,
Yes.
guys.
Subject to loan approval. This is not a commitment to lend.
So, for example, let's say that you're looking in the 4 to 500 price range here in the Pacific Northwest or anywhere, and you can't find anything that's not really outdated. So you'll find a house that's about $375. Okay, you're putting 3.5% down roughly, so that's $13,000. But it's going to need about $100,000 in repair work. So you've got a couple options.
Oh, buddy.
Yeah.
One, you buy it at $375, right? And then after closing, you go and find a personal loan for the $100,000 to do the work.
Got it.
Taking the average interest rates for the renovation loan program and for a personal loan outside of that, whether it's credit cards or personal loan, whatever it may be, family loan, right? Paying the parents back.
Private note action.
Right. Whatever that may be, the total monthly payment is right around $3,400 for that price point between both the first mortgage and the taxes, the insurance, the mortgage insurance, and then that personal loan.
Got it.
Relative to if you added that $100,000 in a renovation loan on including the closing cost, including the reserve contingency, which means, whenever we do construction, if the builder is going to tell you it's $20,000, a lot of times it's going to come in higher than that, right? 70%
Surprise.
of the time. Right.
Cost is higher.
Yeah, so we build in that reserve contingency, so you're not worried about if costs, extend a little bit if you chose a particular tile, but then it comes in a little bit higher. There is a contingency for that. So relatively, you've got $3,400 rough payment on the $375 sales price with $100,000 personal loan. Now, if you compare that to the renovation loan, you're going to pay roughly $2,750 a month.
Wow.
So you're saving over $600 a month for the exact same amount that you owe. But you get all the work done. And there are some of the loan programs for renovation loans allow you to build in the monthly mortgage payment into the mortgage itself. So while the work's being done, you can still keep your current house.
Wow, that sounds like that meets a lot of different check marks on a lot of different people's lists to get done when they're purchasing a home. Can you tell us a little bit more about, are there some criteria that are involved with it? Does it need to appraise at a certain amount of value? Can you kind of tell us a little bit more about how that kind of works out?
Absolutely. So like almost everything, right? It's not all perfect for everybody. And, depending on if you're doing it for a purchase, when you need to close, the timing may not work. Right. So if the house you really want to buy needs to close in 30, 45 days, you're going to need, about 60 plus days to close on the renovation loan. So that may not potentially work. The other really big side to this is market value. So, for instance, I had somebody recently who their house is right around 350 right now, and they want to put literally $150,000 into the house. They want to, add a hot tub built in outside and redo the whole house. The house, once it appraises, still has to appraise for a certain market value with that additional work being done on the property to make the loan work. So for instance, if you've got a $350,000 house and you put $150 down, you're not necessarily going to get a $500,000 value.
Great point.
And, in that particular neighborhood with this particular person, then there was no comps anywhere in the neighborhood that were above 410. And some of the houses had been updated to, a fair degree. So we knew going into it, you're not going to get that full value, and then a renovation loan would not work.
Sounds good. So it sounds like you got to find the right house in the right neighborhood that support the comps and those items that you're looking to upgrade. So you're not going to always get the one-for-one values like in the kitchen or bath where it might give you dollar for dollar. So if you're looking at, replacing the roof, windows, siding, those items that you typically, when you buy a house, you expect the value to be there. It might not give you the same upgrade value when you're looking to, get that, loan to cover all those items, right?
Right, for sure.
And that's on purchases. So talking about a refi, how does that work? So someone owns, they want to refi and put in the repairs, because that's a little bit of a different timeline, right?
It's a little bit of a different timeline, so we have some flexibility with that timing, right? So, you don't probably have to have your floors done in 10 days. There is more timing with that. But still, the market value is still something that we have to consider because, if the market's not going to support that, at the end of the day, whatever that we take on renovation loans, what the end appraised value is with the upgrades done. But if the end is not going to appraise within a certain percentage of your loan, it's not going to work. And you want to have a little bit equity still left over in the house.
Well, it sounds like it's a great time to kind of look at this product if you're refinancing, because maybe you're at an interest rate at 4.5, because the interest rates are pretty close to whatever conforming is. Is that right?
Yes, super close.
Yeah. So let's say that I'm at a 4.5 interest rate and I could still lower to a 3.5% interest rate and include those renovations. I think the nice thing about this product is that, there's some other steps that the bank takes to kind of secure the loan and be part of the process. I think they have inspectors that are going to make sure that the contractor is doing everything on time. They're actually doing some holdbacks, if I'm correct, of 10%, so that every draw period that we're paying out the contractor, we're not giving them the full amount so that they complete the job up to code, up to inspection, and we're sending out those people to make sure that it's done in that timeliness. And as you know, as being a contractor myself, I hear out there some of the biggest, arguments and griefs out there is that, hey, my contractor doesn't show up on time, he's not finishing the project, is not what he said is going to be, and so the bank protects you in that type of situation, because we're in a contract and you're not just dealing with me and my lawyer as an individual, you're dealing with a big bank, that's going to back you on this. So I think it's very huge. There are some costs that are associated with the loan that, but I think that's what you're getting out of it,
It's a nice little protection, layer there for the consumer, right?
Someone that doesn't do it every day, that's not going to be a general or a subcontractor.
Right. And I mean, to sit there and to make sure you're kind of managing your project, make sure your GC is doing all this stuff. I mean, that can be a burden for
you. Just bought this your first big asset, and you're looking to entrust somebody else in doing this. And so a lot of those contractors that are approved through this process get approved, and we're make sure that they don't have any bankruptcies. They have a great resume. So there's all these different steps put in place in order to protect our clients and our consumers. Right?
I think that's a really good point there, and people should know that you have to work with a contractor that is approved for the renovation.
That's a great
work, because I get this call all the time. Hey, I want to do a renovation loan, and I'm going to have my brother-in-law do all the work.
That's
Jimmy.
Right. Or I used to do floors.
Yourself.
I want to do the floor side of things.
Yeah, so that's
no self-help on these situations. There is some cases I think we can put in for one-time use if you are licensed contractor. It has to be something small, but for the most part, we want you at your normal day job doing your work so you can pay your mortgage and, make sure that we're commending on this loan. So.
Yeah, and you can't do like a 80-inch TV. And
Luxury items, it's back to
what kind of items can you put on these properties? I'm curious.
Yeah, I mean, a lot of it's, you're seeing a lot of, kitchens, bathrooms. Sometimes you do need those roofs. There's great FHA products, where we are revitalizing some certain areas and we need roofs, gutters. There's going to be some needs, FHA inspector or consultant will come out there and say, we need to bring up this electrical panel up to code. So there's a lot of make sure the house is safe and sound. And then you can add those luxury items. But it's a great opportunity to find something dilapidated, get it at a lower than market value, and come into it with equity so you can get rid of that mortgage insurance down the road. So it's all about that property. And when you're talking to a consultant that is licensed to do these type of loans, we do a worksheet up and we make sure that it kind of works out in the beginning so you're not wasting your time on inspection fees and everything else. A lot of time we'll just look at it and say, okay, based off of what you're saying, yeah, it looks like, these comps are here. It looks like you might have, 15% of equity when you're only putting down 5%. So you're walking in with 10%. So you just got to meet with your consultant, meet with your realtor. They're going to pull the comps. And then if you have a contractor ready to go, that's the key in a purchase renovation loan.
Bam. How about that? Nailed it.
Love
now, you did mention, I'll swing it back over to Brie. Yep. So you have the different types. Like what happens if your renovation costs, are only, let's just say, they're small. You don't have a lot of repairs. There's only 30 grand or so, or, less than 35. Can you explain kind of the differences there if you have a big, repairs to do or renovations compared to small ones?
Sure. So, on a purchase, and to answer that question for a purchase, there is a loan that is $35,000 under in repairs. So it's got a little more restrictions to it, so to speak.
Got it.
And then there's a loan that's $35,000 and over in repairs. Now, both of those are FHA loans, which means that they're capped at the $491 right now, current loan limit. But what's going to be happening soon here, guys, in the next few weeks, right?
Election.
We got loan limits coming up.
Yes.
Well, we got a couple things coming in the next couple weeks.
Teed up there.
So
Teed up and failed.
Right. So really exciting is that, we usually get word the end of November, the beginning of December about the loan limits changing that changed January 1st each year. And last year they went up, roughly, I think 40 grand or something like that. 35 maybe. So if we see that increase in loan limits again, which we don't know what they are yet,
right?
And what at all, then you have a lot more buying power, right?
And so, that helps you guys out there for listening. Like what we're just saying is, your buying power is increasing, each year if they're increasing these loan limits for you guys.
Well, we're trying to get conventional back up so you can take advantage of the lowest interest rates and the best products out there that are more flexible than some of the jumbo rates that are more. Have some, high
level financing
layers to them,
Yeah, and the renovations it's great for the certain people, not great for everyone. So, for example, I have someone recently who owes $120 on their house, and it's worth about $420, and they need $100,000 out to do their roof and to help a child go to college. So, because they have so much equity, it makes sense just to do a refinance cash out.
Yeah, they're only dealing with one contractor, not a GC. Yes. And don't probably need those layers of safety behind it in that case.
Exactly. Yeah. So that was the best way to go for them. But if they had owed, $300 or $350 on it, then we would be looking at a renovation loan because they couldn't have pulled out enough cash out to do the renovations they wanted. So then we look at that and say, okay, well, if they owe $350 and we know we're going to get up to, $475 in value once the work's done here, depending on the work, the scope of the work, then that could potentially be the best option.
Yep. Got it.
Great point.
That's a great point.
Hey, throwing in real quick. Sorry to clear my throat there. Tried to cover the mic while I did it.
Nice.
Got a question.
We got a question?
Nice.
Got a live question. And,
can we get like a soundboard or something? We got a question, guys.
It's called an air horn. Is that?
I was thinking like yeah, there we go.
No. Producer Josh did it really nice. Look, he even wrote this out because they're not merging on the monitor for us. So, question from Molly: does the 203K allow for deferred payments during the renovation? in case you are doing a refi, reno on a home you already live in, and you may need to move out for extensive work done.
Well, there's a couple different products and programs. She's talking about 203K and tell
some
me if
money
I'm
in.
right. Is it interest only payment during the construction period, or is that just on the home style loan here?
Yes and no.
Okay.
So it depends on which program that they qualify for, of whether they can add those mortgage payments back in.
Standard.
Correct. So it's not like you can add them onto every loan. So it just depends on what they qualify for.
Yeah, and I believe if the house is uninhabitable while you're doing a construction, we can take 6 months of rental income, put it into the loan. That way you can move out and have all the work done. So that is an option. It kind of makes
Right.
sense, right?
Absolutely, because then you can, if you're, have another house, or if you want to go rent another house while the work's being done, particularly if it's like, as Christian said, if it's uninhabitable, then you have, you're not making 2 housing payments, right?
Yeah.
While your work's going
So Molly, I guess that was asking our question.
Yeah, Molly is,
Molly.
and so Molly, yeah. So the FHA limited, no, because it's just 35,000, and that includes your funding fee. All your fees have to include into that. So that's more like gutters, roof, maybe changing out some windows, just like a one contractor type thing.
Paint.
The standard, yes, you can go ahead and finance your 203K rental if you need to. Yeah,
Which is over 35,000 in repairs.
that's correct. Thank you.
Yeah, and I
Great
guess,
question. Thank you.
Yeah, it's
Yeah.
a great question. Thank you, Molly, for throwing that out there. We appreciate all of our listeners. Anyone out there listening and watching,
Yeah, we've had a lot of
please
activity
toss in
on-
those questions, and could be a good way for us to segue right now. And how would you get a hold of us if you want to get a hold of us? We got a little VIP
Yeah.
line out there.
I got the 503.
847.
90.
3.8.
Yeah, it's super important, everyone. If you're wanting to get a hold of the MLO team and you've got any questions, you're thinking about buying, selling, refinancing, we're here to support you. We had quite a few upticks this morning. I was handling a reach out from California.
Texts and phone calls coming in.
Yeah, and I'm sure that individual is listening now. So it was nice texting with you. And I personally called the Sacramento Housing
This guy's amazing over here.
it dialed in the question.
He called the Sacramento Housing Committee.
Housing and Finance Agency.
Yeah, they were awesome.
That's
They were fantastic, but we got a few things ironed out and helped people out. So it's not just that call to action for more business. Like the MLO is all about creating this safe place for
Yes.
people to learn, educate, grow, and we're here to assist everyone to the best as possible.
I mean, we even had a fantastic conversation last night, and it's probably something we might not be involved in, but it's still good to just talk stuff through. People have questions. You might be going through financing that, we're not going to be involved in, but we still can be a lending ear to, try to give advice or answer any questions you have.
Yeah, this panel up here has over 50 years of experience, and we're here to help out with any kind of questions or direct you in the right spot to find out what the answers are. Yeah, for sure.
Yeah, and even if you're all the way through the process somewhere else and you just say, hey guys, my lender's telling me this. Can you kind of tell me why they're telling me this? They're not explaining it to me. So I get that a lot, right? The lender says, hey, you can't close on this date, or we need this and we need this, but they're not maybe explaining why. So call us and we're happy to field those questions anytime.
Yeah, for sure.
That was a nice little breather and a little reach out combo. I think running back into the renovation, one of the biggest things for me I'd like to know is when is it not a good idea to execute a renovation loan? When is it just not in the scope of reality, right? Brie, can you remark on that just a little bit?
Yeah, I mean, to piggyback a little bit on the example about the the refinance and the equity part of it. So if you have a ton of equity and you're looking at doing a refinance, I honestly would really just consider a cash out refinance
Makes
because
sense.
you're going to have some less cost involved and be able to do the work on your own as you want to. So maybe you want to do flooring this month, and I've got a customer now interested in building a pool actually. So maybe they don't want to build the pool until next summer. So get the refinance now, cash out, take advantage of today's low interest rates, and then you have the money already set aside for that.
And they allow for pools on the reno?
On one of them, they
Which
do.
one is that?
Yes, the home style.
Home
The
style. So
question.
not FHA,
Yeah.
but the home style. Okay, good to know for all those people. And there's no way a helipad's included. I can't something like that.
Elevator would be
Well,
sweet.
there's
just say you want a
there.
concrete pad. You
Yeah.
don't have to, they don't need to know it's a helipad.
Really curious. What about
go.
what about, because I've been seeing a lot of ads on social media lately for installation and improvement for solar. Is that something that has evolved in the program as of late? That's just popping in my head.
Definitely upgrades. Yeah, there's a lot of people doing solar right now, which is fantastic. The energy efficient. So definitely that's something
Those are
that
definitely
could be
improved.
added.
Yep.
Yeah. And, I'm not a CPA or tax advisor. I have to disclose that. But a lot of times when you're doing energy efficient, there are tax breaks available.
Yeah, there are. That's a big thing right now, is that like zero down type of solar.
For sure, and especially in our market here too. I mean, we do have some of our big tech giants are here locally, so we got a lot of tech employees and followers that are very, very much into solar. As we'd like to say, we get tons of sun every day here in Oregon. We all know that's not exactly the case, but
Well,
that's
Central Oregon.
Yeah, Central Oregon's got some good
300
stuff.
days a year,
but but they still don't have fire.
Really depends on your house and how your roof is set and everything.
For
It is
sure.
getting much more affordable and makes more sense for our homeowners out there. So if you're planning on looking at some energy efficient upgrades, these products are there, and there is some incentives out there to help you with this. So reach out to us. I mean, these are the type of conversations I like, just getting some off-key conversations every other day. It's just not always just, hey, what's your 30-year fix? I want to talk. These are fun loans to talk about because, like you said, it might not be the best product for you. It might be a home equity line of credit we're looking at, or it might just be that, hey, you probably shouldn't be putting marble floors into this house because every house around you has this. So we can talk about, hey, does this make sense to do this? Is it going to be a rental down the road? Should we be putting these type of products into this house? So, and that's another good point. Are these products available just to, primary homeowners? Is it for second homes, investors? Brie, can you go down the list and some of the criterias on that?
Yeah, sure. So primary, second home, and investment property are all eligible with it. However, the down payment is different for those. So with a primary residence, you can have as little as 0% if you're a veteran, or 3 and 3.5% if you're a first-time home buyer, or 5% down if you're not a first-time home buyer and doing it and buying it as a primary residence. If it's a second home, you need 10% down. If it's an investment property, you need 15% down, or if it's an investment property refinance, you need 25% equity in the home.
Gotcha.
Got it.
Yeah. So, I had somebody that bought, for example, 2 years ago, and they put 25% down. And they never, even though we talked about all their plans, they never just happened to share with me that they were going to do a complete remodel of this house on the interior. So after they put 25% down, after closing, they went out and got about $80,000 in credit card debt. Wow. And that dropped their credit scores from, just under 800 to in the mid 600 range with that. So, we ended up refinancing it later and taking care of that and getting their credit scores back up. But, share with us too, if those are your plans when you're looking at buying, and share them with your realtor when you're looking at buying, because in that case, I would have said, wait, stop. Let's not put 25% down. Let's find out how much you need to do the renovations, and let's maybe put 3% down so you can use your cash to do the work on that. You don't even need a renovation loan. You just put less in the down payment, and the monthly payment is going to be a lot cheaper for you than paying on that credit card debt. Even if you get a 0% interest rate for the next 12 to 18 months on your credit card debt, you're still going to have to figure out a way to pay off that 60, 70, 80 grand within a short amount of time frame.
I think to back that, Casey, the statistic we were talking to Brie about prior was that 53% of people invest in their home improvement. What was it, like within months? The first
Within
6 months,
3 months,
3 months of owning a home.
Yeah.
And what is the average? What was it, like 4.5?
Yeah, so they
4,500 bucks.
53% of homeowners invest in a home repair or upgrade within the first 3 months of buying, and it's typically they estimated at $4,500. What happens is 70% of those end up averaging $20,000 once they get into it. So that's a good chunk of credit card debt or personal loan debt.
Open up a can of weeds is what we call that.
Yeah.
I mean,
When it's always like the first 90 days too, something happens to the house because the owners before it are distressing everything out of it. They're not, for the most part, something happens.
It's just common law. It's just going to happen.
yeah.
I came home from work one day and my water heater had busted and had flooded the garage.
Yeah, they has that little
super fun.
Yeah.
Oh wow. Well, I mean,
it was
2.5 years ago we bought our house, and I'm still doing projects every day on it. I mean, it's just continuous.
My husband and I joke all the
what it
time that
is.
in our closing package we need to have that movie, The Money Pit, with Tom Hanks, because that's typically what happens.
Worst case scenario, best case scenario.
Right.
For sure. But I mean, there's so much good stuff, and it's not, I don't think it's consumers' fault out there. I mean, they're trying to improve their home, right? They're trying to add value there. So that's the driving factor. And I think that's very, good and beneficial for clients. It's just make sure you have the right conversations, because you might be thinking you're doing the right thing, but you don't know what you don't know, and it might put you in a little bit bad situation later on. So we can hopefully help guide you in that right direction. And renovation loans can change a lot of that, unwanted HELOC, line of credit, credit card debts.
And that's why we're here talking about it today, just to inform everybody as much as we can.
Top conversation for sure.
And throw another book on the shelf too. Christian, Casey, and I had another episode in season 1 of the top return of investment home improvement projects. This was a really good run through. So reference that on season 1, top ROI home improvements. It rolls through like a garage door and different.
You'd be surprised at some of the stuff.
Stone veneer.
Yeah, stone veneer.
Yeah, that's the official. I didn't
Big
even know.
catchy upgrade.
That's what that was called until
That was
we
at
did
like
the-
78%.
Yes, coming in
Dollar
hot
for
at
dollar,
it.
dollar for dollar.
for dollar.
But lots of good stuff.
Yeah, and at the end of the day, there's an opportunity to put down as little as 3%, 0 to as 3% down, depending on if you're a veteran or if you're a conventional or FHA borrower. But you're borrowing this money amortized over 30 years. You're not taking out a credit card at, even if it was like at 7 or 8%. I mean, that's a big payment. It's a waste of interest going down the drain. And rates are so low right now. So if you're trying to achieve all your goals into one loan, maybe this is the right product for you. It's going to depend on a couple different things, like we talked about, just to kind of like bookend this. Is it going to, appraise for the value that you're putting into the house? Are you putting the upgrades that are going to match your neighborhood? Are you going over the top? Is there going to be an equity position at the end of the day? Because what we're going to do is we're going to take the purchase price plus finance the home repairs, and then you're going to put down your down payment. So you just got to kind of keep those things in mind when you're looking at this product. But it's a fantastic product for a lot of borrowers out there. At the end of the day, it's a great talking point with realtors that have those homes on the market for 60, 70 days plus that need work. Those disclosures are out. When you had a home inspection, now those boxes are checked. And we can help that borrower by saying, hey, this home is approved for a renovation loan. And they may have some ideas already put in place. So if you're a realtor out there that have a home like this, maybe get with one of our approved MLO loan officers with renovation loans. We can show you how to market the house a little bit differently. There's just a lot of great things with this product that can help out a lot of consumers, realtors, investors out there. So please reach out.
I love it.
That's beautiful.
It is beautiful.
Done.
I just love this product. It's a good one.
I just wish I had like my little violin or like a guitar to like somehow help Christian with
What do
that
we got?
great run. He
You
did.
got something?
Brie, mother of mortgages. Anything else to conclude before Casey and I slide into the close?
So I think maybe a little bit on the next steps. So if somebody's interested in this and
What's the next steps?
what do you do, right? One, you want to talk to your loan officer and your MLO loan officer and find out what it takes to, if you qualify to begin with. And then if you do, we want to set you up with a contractor. So we build that relationship as far as you starting to think about things that you want to do. You get with your realtor and you start looking for houses. Once you find a house you're interested in, one of the biggest things we're going to need is an estimate breakdown of cost and labor, of supplies and labor for the rebuild or renovation. So once we get that, then we can help you determine kind of what your payments and down payment investment would be. So those are the next steps, and then you make an offer just like you normally would, and go through the process.
I love that.
And you can build it to your dream.
You can build a teardrop within means.
Within me.
Well, we would love to be here and continue to be a support, and we're going to roll this into a conclusion. I really enjoyed this. I felt a little bit like Brie and Kempers were the main
It's definitely
heart.
Brie and Kemper as well. But guys, we're here for you.
Yeah,
a
we're all
team,
here.
100%.
We work
Amen.
as a team here.
Today they were like the bread, and we were the meat and cheese in the middle.
Yeah,
like
so
they
we're
held
like-
it together. We just laid here.
They're like two bagels, and we're just a little cream cheese.
a little
and
cream cheese.
He and Josh up there, he's our bag of chips or soda or something
Yeah,
on the
there you
side.
go.
He's our side.
He's all that in a bag of chips.
Right, exactly.
Side action. We love our producer Josh. And on that note, Josh, let's hit a little out music. And once again, everyone, you've been listening to MLO. And if you want to get a hold of us and we can help you with your next dream home, the renovation, you can get a hold of us, right, Casey?
Yes, you can. And you can shoot us any messages throughout the day. You can watch us live on Facebook. You can catch us on our audios on all the podcast platforms. But make sure, guys, you reach out. That's our biggest thing we push. Just reach out, shoot us questions. And how do you get a hold of us on that number one last time?
That's 503.
847.
90.
38.
And it's really sad because that's the VIP number, but no one has the little letters.
847's VIP.
It's
Just
VIP.
know that if you call, you are a VIP.
You are a VIP.
That's right.
Hit us up on that line. And yeah, like Casey said, we're all over anywhere where you grab them podcasts. So if you're on a part of our Facebook community, you can listen to us while you're driving, you're working out, weekend projects, whatever. And if you're just a subscriber on the podcast side, right, what do they need to do?
Right.
They got to watch
You
us.
got to watch us. You gotta
Please
see
download.
us.
I can't
Like-
believe how many people we talked to that have never
Wait.
seen our beautiful studio and stage.
I just want to know what they think we look like for listening to us all the time.
Check out our mugs on
Not
our
funny.
YouTube station.
Yeah,
you know?
we're all over that. We're
Yeah.
all over that. Bree, why don't you start the round sign out? Say goodbye. Say thank you.
Thanks everyone for joining us. Have a great rest of your week.
Yes, get active. Get through the last couple of days. Thanks for enjoying.
And again, rounding it off from MLO, Christian Kemp, and thank you for another great episode.
Happy Halloween.
That's
Happy
right.
Halloween.
Yeah.
And make
That's
sure
right.
to
Yeah.
get out there and vote. And until
Vote.
next time,
Rock the vote,
Vote.
baby.
we'll check y'all later. What was that little